Ladies and gentlemen, welcome to the midday market monitor. Almost messed that up once again. In today's video, let's quickly take a look at the Mag 7 names. We have Meta up 2.2% back to 537, a long way off from being, above $700+ a share. Amazon up 1.8%, above 200, but flirting with 199 today. Nvidia is down. The semiconductor names, ladies and gentlemen, absolutely getting crushed right now. If I could actually skip ahead. So Microsoft's also up. We'll talk about their new Critique product here in a second. But Micron is just taking a fistful of crap right to the face. Look at this, down 7.7%, $329 per share, a little actually under that. I'll remove chat here for a second. And this massive sell-off, not just on the Google Turbo news, but slight inklings that certain, phone companies and all of these things have actually turned down memory sales on increasing prices. So this has also been the report recently. In my opinion, I don't know if it's if the chip companies say, hey, we're not going to pay the higher prices, does Micron care if Nvidia will? Do some of these businesses care if the prices continue to increase, or do they just say, okay, don't sell any product, we'll go sell to Nvidia in the AI industry? So I think it's a mix of how that's all going to pan out in terms of total sales, where the pricing is going to go. And then in the mix of that, we still have oil in not a great area right now. We have crude above roughly $103 today. Let's go ahead and take a look at that. Crude oil at $103 per share, up 3.5%. A sustained $100 barrel of oil is not going to be a good sign for markets. People can really get spooked out of, equity markets, because overall prices will begin to rise, and then we start really, really questioning if we're going to see a recession. It's not just oil as well. People are talking about a lot of different products just because the infrastructure is getting destroyed right now, especially in the Middle East, that costs are just going to be rising in general. Okay. Let's see. Nebius probably going lower than 60. Well, I'll show you why I believe that that's not going to be the case. Obviously, the macro can continue to get worse. This is what I was talking about on my last live stream, like literally an hour ago here. Is that I think predicting price like this and then saying, hey, how much worse is this going to get? It's like it all depends on events that haven't even happened yet. If Trump continues to double down on this war, send more troops, in the short term, that can be horrible. More infrastructure gets destroyed, takes longer for that stuff to get back up and running, and we might not ever get back to the rate of like even if we were to leave, the energy supply that we would be able to try to put up in terms of oil might not actually be able to get there, because Qatar LNG facilities and all of this stuff has literally been destroyed. So a lot of that is questioned right now. If this continues to move further and further, which I don't have a crystal ball, I can't tell you, we're just literally monitoring the situation. Things can obviously get much worse, and Nebius could go down to $60 or whatever. But as I'm currently seeing it, what here, actually, let me do it this way. Let me open up this instead. This is what we were looking at earlier. The Nvidia B200 rental prices are skyrocketing. Not because of a lack of demand of Nvidia Blackwell chips, but because the supply, not because of a lack of supply, but it's because the demand is super high. Okay, so for the cloud names, this is super exciting. You could put up an argument to say, hey, well, Google shouldn't benefit as much because the AI narrative is replacing their current business. It's a little bit cannibalistic. But Nebius's entire business benefits off of spikes in prices like this, not because the cost of their B200 chips have gone up, but because the demand is spiking even while supply continues to grow. That's how much people are looking for more AI demand here. On top of that, it's not just this specific chip. Matthew here also highlighted that the Nvidia H100 rental costs are also spiking up really freaking high. This is right at about the peak of what we saw in, what does that look like? April of 2025, which then proceeded to fall, not only because new supply comes online, but then we end up seeing, what was I going to say? New Vera Rubin, Blackwell chips, all of these things that are much more powerful also come online. So the price actually should fall over time. The fact that it's spiking back up is finding new use cases, not because, once again, it's more expensive to make an H100 or it's more expensive to run one, but because the demand is coming up. An hour ago was a member-only live. Yeah, we do a member specifically for futureinvesting.pro users every day from 12 to 1. Just trying to get ahead on the markets and talk more about the actual portfolio and listen to some of the news stories that are coming in. Semis are dead. Well, I wouldn't think that they're dead. I mean, honestly, I'm seeing a lot of great signs, but the pricing of this, look at this, look at this heat map right here. Look how disgusting this is. It's the biggest sector. It's the biggest sector, red hot. The only thing more red is semiconductor equipment and material. Electronics, computer hardware, communications equipment. These are the red things of the market. Software got killed. Now semis are getting killed. Crazy. It is just a bad time. I agree with Candle in the Wind here. It's just a bad time right now. They happen. They really do. But for me, you know, as being more of a I don't know, traditional investor or something like this, time in the market is better than trying to time the market. I don't want to try to sell out because Trump could taco. Now, seemingly, versus his normal playbook, this, like, the Iran war is the one thing that he's actually not tacoing right now. It seems like he's constantly doubling down. But yeah. Okay, let's see. This is why you always hold cash on the side ready to deploy. Yeah, but then you deploy it and then it keeps dropping. So now you're in the I'm in the phase of, okay, like, the dip keep dipping, so we keep buying, and now it's like, okay, well, now I got to go make some money. And Marshall, I just hired this guy. So right now he's decided to not get paid. We talked about it. I'm not going to be able to pay Marshall for a little bit while Nvidia is down. If semiconductors are in the red, like if we see red here, he just doesn't get paid that week. But if it goes green, then I'll see what I can do. That's a joke. He's actually backstage right now. He's monitoring the chat for in case Dookie Pie gets crazy in chat. That recent SoFi video, everyone please say hi to Marshall. Thank him. The recent SoFi video that we just put up was literally edited by him day one. On the job, edited that video for me, and we got it out same day. And that's what we're gonna. We're already done the edit of the second video. Like what I told you guys is, like, we were gonna be way more consistent once I got some help. So yeah. Bing M calling the shots now. Yeah. Yeah, he'll keep you guys way more up to date. Muddy Waters is going, you know what's so funny is this actually brought the stock down. Luckily, it recovered, but it's so funny. They didn't say anything new. That was literally a part of their short report, and then they just tweeted about it again, and then the stock fell. And I'm like, that was in their original short report, guys. What are we freaking out about? Then there was some recent news that a lot of the private asset managers are under investigation. Ares Management, KKR, a lot of these big private asset names are under investigation regarding potentially using too much leverage, being irresponsible with investor money, that sort of stuff. That could put a hamper on SoFi's business. That is very much real. Okay. And there's a lot about this current macro that does not make me excited about SoFi. Increasing rates, a potential recession or anything like this, it would suck. That part would suck. The fact that some of their securitizations might not be doing well right now, that's not good. And so the forward PE of SoFi is now falling. I think it's actually below 25 times right now. But there's a lot of things on sale. So it's not like I'm just pouring every dollar that I have into a name like SoFi because, SoFi's forward PE might be 25 times. Great. No, that's good. Nvidia's forward PE is like 20 times, if not 19 times right now. Well, that looks even cheaper. The forward PE of Micron is like friggin' 3 times. So there's a lot of things on sale. Yeah. I'm down so bad on SoFi. There's a lot of companies down right now. The Toronto meetup will be like in August. I would literally delay it if it was around this time. Like the markets need to be in somewhat of a steady area for me to want to do a meetup, or else that thing would be freaking depressing. We're in a slump right now. These things happen. VCX is on sale. It is not, Dylan. You're being scammed into buying this company at a premium. There's a reason why it just fell 80+% in the last 3 days. VCX, if you guys don't know, is tracking Anthropic and Databricks and all of these things. They just went from $560 down to $100 in a few days. Citron Research actually shorted them, which is, that can be very dangerous because if it turns, if it just keeps going up, like, how do you know it would even get to 560 in the first place? That was however many X, like 20X higher than what it should have been already. Like the actual net asset value of VCX is like $20, if not a little bit less. You want to pay a good premium for that? Okay, $25, $30. We're at 100 after being at 560. You know what I actually saw? I don't know if I put it in my notes just yet, but there was a pretty interesting piece that just came out from Kalshi talking about how SpaceX is looking to get rid of Robinhood and SoFi from having access to their IPO. They don't want them as part of the syndicate. And literally, this seems like the opposite of what they came out and said that they were going to do. SpaceX came out and said that they want a much, much higher percentage of their total shares going to retail investors, but then is looking to cut out two of the companies that have some of the most amount of retail investors. Like, that seems crazy. Yeah. How do you even get to 30% retail with no Robinhood? It could be fake news. It was reported by Kalshi, who got that source from Reuters. Elon Musk has had his fair share of fair share of complaints about Reuters. Truth, I guess. Okay. There's still a lot of institutions that use both brokerages. Didn't want to own SpaceX anyway. How many of you guys here? Let's put up a poll real quick. How many of you, or I'm going to phrase that differently. Will you buy SpaceX IPO? Yes. No. Okay. 1 for yes, 2 for no. It doesn't pick up if you do it multiple times. It only counts 1. It's tracking it by the account. So let me know. 1s or 2s. Whoa. That's a lot of 2s. I was not expecting that. I thought that was going to be like a 50-50 split. Okay. I think if you do a 2 and then you continue to type, it also is not going to work. I'm pretty sure it's a 2 or a 1 without additional characters. You'll be exit liquidity if you buy SpaceX at IPO. I mean, it is a pretty unbelievable price. That's for sure. Let's be honest, no one wants another Figma style rug pull. It kind of has a Figma like valuation too. Obviously, Figma is a lot smaller, but like a one of one company that ends up coming onto the markets, the valuation versus the actual like fundamentals that they're putting up, the revenue and profit of SpaceX doesn't even remotely match how much they're asking for, $1.75 trillion. But, you know, hopefully they grow into it. I don't understand the business of space at all. Right now it's communications. Maybe one day it's going to be data centers. We just saw the fastest growing Y Combinator company in the world get to, I think, wait, what was it? 17 months or something? They went from 0 to a unicorn in 17 months. I'll have to find it. But a company called StarCloud ended up just raising over $1 billion valuation to try to bring data centers to space. Look how freaking, whenever I see something that's this futuristic, I would never invest in this. But as an Nvidia shareholder, I wish them good luck. 5 gigawatt data center, 4 kilometers worth of solar panels out in space. I wish them luck, but it's just a little too futuristic for me. Okay. Is Nebius selling off right now? Nebius continues to fall. It is true. We're hitting new lows right now. Not new lows, but lows of the day, intraday lows. 91.19 as rental costs on H100s and B200s continue to rise. Those are Nvidia GPUs that people want access to help train their models and run their essentially generate tokens for their AI services. If the rising costs go up, but the energy is not matching that, and obviously there is rising energy costs as well, but it's not even remotely equivalent to the fast rise of B200 rental costs, for example, spiking up 35% this month alone to an all-time high. That's not being seen in the costs. So demand is rising. This is going to help neoclouds and data centers. But you're future investing. I am future investing, but I'm not. I'm not crazy enough to invest in something like StarCloud, not just yet. There is way, way, way too many businesses that go to zero. Like way too many. I would need to see something a little bit more tangible. I would definitely, yeah, near future investing is funny. I would definitely invest in private equity, early stage private equity. But I'd need to be able to believe that they could accomplish what they're hoping for. Okay. The verdict, 14% of you guys said you'll buy SpaceX IPO, 86% no go. We'll drop that there. Tanner, I started building my Nvidia position. Congratulations. How diversified are you? Not diversified enough across industries, but I'm extremely focused on tech stocks, which hurts on a year like this. Like it doesn't it doesn't feel good. But whenever I see comments like this, like, are we going to zero? Like, so clearly not. These are some of the most profitable, fast-growing businesses, but there's a lot of uncertainty about where we are in the macro. A lot of people trying to be opportunistic about timing these sort of things and getting out now and being able to buy much lower, which might absolutely be the case if we end up going into a recession or, things get much worse with the Iran war. There might absolutely be times to buy in lower. But I don't know. I'm not a good predictor of the future of what Trump is going to do. More times than not, he tries to taco out of these things. But this time, maybe a little bit different. Going to zero is a buy signal. Saying it's going to zero is a buy signal for sure. The markets usually do the opposite of what you think it's going to do. Bitmine under MNAV, it absolutely is. And it's actually getting ridiculously scary now. Not scary in the form of like they won't be able to survive or anything. Once again, the whole idea of going to zero is not going to happen for BMNR. They make profit. They pay for they make more in staking than they would in stock-based compensation and any of their salaries or anything like that. But it would make more sense to buy BMNR than it would be to buy the equivalent amount of just Ethereum. I think the MNAV is somewhere around 0.9 right now. Crazy. Thoughts on Hood in these markets? It's gonna suck. We are in like extreme fear. It hasn't gotten as bad as the Liberation Day event. It might feel like that because, maybe you guys have more money in the markets now after making a lot, but fear and greed's at 10. We were at about 4 for Liberation Day whenever Trump announced broad-based tariffs across the world. So it's actually not as bad. All right. We'll see. Can we bring Joe Biden back? I don't think legally we can. What? How many of you guys are superstitious like this in terms of like, I never really believed in superstitions, but like if someone goes live, obviously if Trump or JPOW goes live, like obviously those people control markets. But some people are like, oh, well, that person is also playing at my blackjack table, so that affected the cards that I was going to get or something along these lines. I mean, maybe in reality they would affect the cards that you're going to get, but like they also could affect the cards that you're going to get in a positive light. Not at all. Not superstitious. Nope. Some people are like, hey, man, if Jim Cramer holds my stock, I sell. Only a little stitious, but not crazy stitious. All right. Unless we're talking sports. Yeah, I never understood that. I'm going to wear this unclean jersey with another dude's name on my back to make sure that he wins. Bro. Time to grow up and lose money in Nvidia stock like the rest of us. Okay. Let's see. VCN, dude, literally at $100 a share. Literally. Mag 7s, Tesla down 1%, 357. Nvidia 165. 165. White House is live. Let's go see the White House. It's Carolyn Levitt. What's she talking about? Let's have a listen. Marshall, if you're not keeping chapters, this is a good time to start doing so.
Seeing the remaining elements of the regime become increasingly eager to end the destruction and come to the negotiating table while they still can. Despite all of the public posturing you hear from the regime and false reporting, talks are continuing and going well. What is said publicly is, of course, much different than what's being communicated to us privately. As a result, President Trump issued a 10-day pause to postpone planned strikes on Iranian power plants and energy infrastructure. This remains a truly once-in-a-generation opportunity for the regime to make a good deal with the United States, permanently abandon their nuclear ambitions, and stop acting as the world's leading state sponsor of terrorism. If the Iranians reject this golden opportunity, the greatest military in the history of the world continues to stand by to provide President Trump with every option available to ensure this regime continues to pay a grave price. One way or another, Iran will no longer have the credible ability to threaten the United States or our allies, which is, of course, the overall objective and mission the president set out when he launched Operation Epic Fury. Unfortunately, even as President Trump is working hard every single day to protect the United States from foreign enemies, Democrats on Capitol Hill have failed to do the same here at home by keeping the Department of Homeland Security unfunded. Over the past 6 weeks, Democrats in Congress have pushed our air travel system to its breaking point and inflicted massive pain on Americans with their reckless political games. 500 TSA officers quit their jobs. Thousands more were calling out sick at record rates due to the lack of pay. This resulted in security wait times exceeding 3 hours at major airports across the country, creating nightmares for millions of Americans. Overall morale among TSA staff plummeted as well. All of this creating an unacceptable heightened security risk. Because of the Democrats' unwillingness to do their basic job of funding DHS, President Trump determined that these circumstances constituted an emergency, compromising American security. That's why last week he accordingly signed a presidential memorandum directing the Secretary of Homeland Security to work with the Director of the Office of Management and Budget here at the White House to use those funds with a reasonable and logical nexus to TSA operations to provide TSA employees with the compensation and benefits that would have accrued to them but for the Democrat-led DHS shutdown. This bold and necessary action by President Trump will ensure our TSA workers receive their hard-earned paychecks. It should not have come to this point.
All right. Well, it looks like they're done talking about the Iran war. If they get back to it, let me know in the comments. But we're trying to see what is going to affect my lovely Nvidia stock right now, finding new lows on the day, down 1%. SoFi, mind you, is now a top 50 U.S. domestically chartered commercial bank, ranked by the Consolidated Assets ranking by the Federal Reserve. So pretty exciting. $46.5 billion in assets, 50th largest bank. They double that, they get to like 92 million. I think that brings us up to about 39th place or something like this. It starts to get tougher as we climb the ranks. We're a long ways away from being top 10. But it's not like every other company on that list is not trying to grow. They're not static, and then SoFi is trying to grow. They're all trying to grow. So the fact that SoFi continues to pass businesses on the way up is pretty exciting. Okay, there's a Q&A going on. Let's see. What
would you say to Americans that are somewhat concerned that the shift has happened?
Sure. Well, while there has, of course, been a change in leadership at the Department of Homeland Security with former Senator, now Secretary Mullen.
I don't care about that. All right. The White House did recently announce, though, that more than 4 million children have already claimed their Trump accounts. Where? Where, White House? I want to know. Are these with Robinhood, with SoFi, with traditional brokerages? 4 million is a lot. I think that's more than I thought at this point. I thought it was going to be a slower rollout than this, but I guess giving away free money is I guess a viral title. It can spread pretty quickly. Bernstein maintains its outperformance, in spite of everything that we're seeing, and holds their price target, cuts their price target to $130. But $130 versus where we are today, still a lot. Actually, let's look at it this way. It's just a little bit bigger. Key takeaways: roughly 25% EPS growth expected in 2026, despite a weak Q1. 30+% revenue compounded annual growth rates between 2025 and 2027 expectations, driven by new and existing segments. Prediction markets are scaling, contributing to trading in revenue mix by 2026 expectations, and crypto volumes expected to recover in second half of 2026 with improving take rates. I'm curious to know how true that's going to be. That lines up with a lot of crypto expectations that I've seen. Second half, crypto ends up turning around. Obviously, now they're going to have WonderFi online and Bitstamp and Robinhood crypto scaling. And so while they're taking the hit on crypto right now, if that does end up recovering in second half with higher take rates, like better margins, how much that additional volume will end up helping their overall revenue and EPS growth. Non-trading revenues is compounding, including margin lending, gold subs, and deposits. Not only that, there's one that they never talk about. You have to go digging and looking for it. But instant withdrawals on Robinhood have steadily grown at an unbelievable rate. Kind of interesting. $130 price target in this market. Okay. Hood's going to 45. I mean, hey, we're in that market for that kind of sentiment. That kind of sentiment does okay around these parts. You can get some likes and some retweets with that kind of behavior. But you just wait till it turns around. No one's going to have anything to do with you, Drew the General. They're not going to want to hear it in a bullish market. But you're lucky. The Bears have come out to play. Okay. Honestly, I couldn't disagree more. SoFi's issue is about accounting methods. It'll eventually be changed and the cloud will dissipate. No, actually, I think more banks are actually changing to fair value marks than the other way around. CECL is the one that's actually dying as a percent. No, like, obviously, it's still the high majority. I'm not saying it's dying, but, we just saw Lending Club end up switching over SoFi. Like, you're seeing more go to fair value marks than not. And so I don't actually think that they're going to change their decision there. I actually think more will adopt it. Erwin, how's it going, brother? What a freaking profile picture that is. You look handsome as ever in that picture. Erwin was just at a MITS meetup. I saw a funny picture of him looking at his phone while the market was bleeding out. I mean, I'm interested to know, like, although the meetup, obviously you get to see a lot of amazing faces there. How was the sentiment? Were people a little bit lower? Is SoFi in the 14s? Gosh. 1501 right now. Did touch 14. But by golly, this is I literally told Marshall, like, whenever he came on, I was like, dude, I can't tell you how bad of a time that you're coming at. Like, it'll be good because by the time like things are re-ramped up, he'll fully understand. Like, it's actually good that I have to take away some time to like help train him up a little bit during these types of events, because boy, oh boy, I'd rather not do it in a bull market when everything's better again. Okay. People let Erwin date their sister. Dude, he's like 6'3". The dude's I think we have a picture together. He's a handsome bloke. I actually have a photo or a video on my phone that I will cherish forever of Erwin explaining why a painting on Amit's wall is that the girl does not like the guy as much as the guy likes the girl. Very funny. Okay. What are the viewership trends in different markets? I've got no clue. I've got no clue. I just know most of you guys are from the States. Where are you guys from? Obviously, I don't need to know your address. Don't be throwing postal codes in this chat. But like state, province, country, territory. What's the Chinese areas called? I can't remember. Prefectures? Prefectures? I think that's what they're called. India, Mexico, Poland, Texas, Ireland, Poland. Okay, maybe you guys aren't all from. Is that like that's where you guys are right now? I'm not even seeing any from the States. Luxembourg, from Spain, Mexico, Greece, Germany, Poland, UK, Scotland, Romania, India, Texas. That was in order. I was not being picky. My stats, I think, say something like 60+%, 60 to 70% are from the United States. New York, Epstein Island, Winnipeg, California, Missouri. Yeah, that Epstein Island one caught me off guard. That dude's got Starlink for sure. Brunei, Norway, Latvia, Chicago, Trinidad and Tobago. This is crazy. I don't know why I don't have. There you go. It's up on screen. Sorry, I wasn't on screen before. That was not fair to you guys. Iran. Okay. All right. Computer use is now in Claude code. Claude can now open your apps, click through your UI, and test what is built right from the CLI. Oh my gosh. Dude, it's actually crazy. Like, just the amount of demand that we're going to need for some of these tools. Like, it's going to be able to use my computer. That's pretty nuts. Okay. Jamaica, T-Dot. Me too, my friend. Ottawa. Yeah, yeah, yeah. Yeah. You open up computer use in on Claude and it just goes, you've reached your limit. The second you click run, you've reached your limit. All right, let's go take a look at the market right now. Fundrise 99.99 down 42.2%. AAOI down 14%. Applied Digital down 14%. Cipher Digital, Bloom Energy, 8Co. I mean, these were Wall Street darlings a couple months ago. Now, they're all getting taken out back and shot down. And we're the bag holders. We have to clean the mess up. RVI down 10%. Nebius down 10%. $90 a share. Well, demand looks like it's stronger right now. Iren down 10%. 31.54 on Iren. They have like 4.5 gigawatts of capacity. This is why I don't believe in Iren. Okay? If you have 4.5 gigawatts worth of capacity, why is their phone should be ringing off the hook, like just from Zuckerberg, Google, AWS, just being like, how much to just send the keys our way? Because to buy new infrastructure, new shell, power, land, chips, everything is a gazillion times more than $10 billion. Oracle should just, like the phone shakes and the whole desk is shaking at Iren because of how much capacity they have versus their current market cap. AI is being canceled. Good luck with that, Bernie. I see you, Bernie Sanders, in the chat. You can go talk with that about, go have a conversation with your Claude. Okay? I don't want to hear it. CoreWeave, $67 a share. You know what's crazy is CoreWeave at 35 billion, Nebius at 22 billion. Like, these are insane price differences. Tanner, take your shirt off. How did you even get mod status here, dude? Stay on topic. Saying you're in my who wants Tanner to take his shirt off for 10K? The Google takes 30%. I can't afford this. She's crazy. But Micron is looking cheap. Okay. Fubo, $8.39. This is a $900 million company. Crazy. The sell-offs are unbelievable. We did a stream on Airtest Systems not long ago with Roy Crossroads, and now it's down another 8.8%. Not because we did the stream, but in spite of it. Or that's the same thing. I'm reading some chats here. It's 10K though. I get it. I do. Yeah, meet me at tannerfans.com. Okay. Hard times, brother. OnlyFans is the only way to DCA. And you know what's the funny thing too? Is it's Dookie Pie. So I know she's being honest. Like she has the money to spend, just like, I was going to say to get her rocks off. I don't even, that's disgusting of a thing for me to say. It's not even that. I think she just likes an inappropriate joke and she'll pay 10K for that. But that's why I have to be the responsible adult in the room that doesn't let the rich get whatever they want just by flashing their checkbook. But It is 10K though. So like, no, the shirt stays on until Micron gets really cheap. Amcor down 7.4%. Teradyne down 6.5%, $276 per share. This is absolutely crazy. Dookie, how much further are we going to keep falling, or eventually are you looking to start buying some names? Crazy. Ethereum, ServiceNow, AJG, these things are green. The trade desk up 4. Where's all the money going? Maybe into bonds, interest rates. I make your channel a little better. Dude, Dookie, I'm so happy that you're here. I love the back and forths. Where's the money going though? If rates end up going higher, we could definitely see some more risk-off activity because the risk-free rate climbs much higher. I mean, maybe it's less of a risk-free rate now, though, however. Maybe people are worried. I think there was a report today that said that, what was it? Healthcare was going to get cut to help fight a war or something like this. What was that? Let's see if I can... Republicans are considering reductions in federal healthcare spending to help pay for the budget bill containing as much as $200 billion to fund the Iran war. I mean, that is like a all-time terrible headline. No bueno. But yeah, hopefully we find some middle ground here. I declare bankruptcy. Yeah, that's a good one. I'm caught up on the. I'm caught up on the Office jokes. Okay. Barclays analyst on how risk is being priced into the oil markets during the U.S.-Iran war. Iran war threatens higher prices for China-made goods in the United States. Okay, let's listen to Barclays really quick.
This morning is Barclays energy analyst Amar Singh. Amar, it's great to have you back. Thanks for the help today. I am curious to get your take this morning on this sort of narrowing spread between West Texas and Brent. It's more like $10 today and not 15 or 20.
Thanks, Carl, for having me. So we break down the Brent WTI spread in 2 components. The onshore component is the cost of getting oil from Cushing, Oklahoma to Houston on the coast. And then the offshore leg is basically getting it from Houston to UK, where it competes with Brent. And what we've seen is because shipping costs have gone up, we've seen the offshore leg widen. But more recently, what we've also seen is market participants probably betting that there's going to be some export restrictions in the US, which has led to the widening of the onshore spread as well.
Do you expect that premium to last?
It depends on how things play out. I mean, at this point, shipping rates are very high, obviously, but we've not seen any formal announcements from the administration about a potential restricting of exports out of the US. So if that remains the case, you could argue that it's just limited to the offshore leg and the onshore leg goes back to normal. It was about $1 on average last year. But if we see like sort of the era going back to 2015 and before, where exports were out of the US were restricted, then the onshore leg could widen a lot more, and the overall spread as well.
So when we read exactly what the president is threatening here, obliterating their electric generating plants, oil wells, and Carg Island, and possibly all desalination plants, what is priced in exactly in terms of that risk right now in the oil market?
So we've laid out 3 scenarios, and where market pricing stands right now is in the middle of the first 2. So the first scenario is the most optimistic one right now, that we get a normalization of the Strait of Hormuz situation by early April, and that would get you to a full year average Brent of 85. As of Friday close, the forwards implied 2026 average Brent was at 91. The second scenario is the Strait normalizes by end April, and that is consistent with Brent averaging $100 this year. And the third scenario is the Strait normalizing by May end, and that would be consistent with Brent averaging 110. So as I mentioned, we're basically in between the most optimistic and a little bit more worrisome scenario right now.
What about the Kharg Island option, where the U.S. takes control of Iranian oil? Is that a risk for higher oil or lower? We'll have to see how that plays out. Rhetoric on that specifically has been extremely elevated, with Iran threatening attacks on regional oil infrastructure in response. And so far, we've seen sort of very limited effect, at least on the oil side. I mean, Jeff mentioned earlier attacks on aluminum sites and LNG sites. But on the oil side, it has been limited to oil depots and refining complex, but we've not seen upstream infrastructure or even midstream or shipping terminals attacked to that extent yet. But if that were to happen, then that could compound the duration effect that I was talking about as it pertains to the Strait of Hormuz itself.
When you think about LNG and the vulnerability of some of these, say, Southeast Asian countries, do you think they're going to start to turn toward coal over the long term, or even some renewables as a replacement for the unreliability, at least for now, of this LNG episode?
Yes, I mean, this is exactly what happened in 2022, and we're just seeing an extension of that. I mean, the 2022 crisis was, finally something that markets were beginning to start put behind with the expansion in Qatar coming online later this year. But now, obviously, with the facility in Qatar hit, even the existing capacity in the country is now under question. Even if the Strait were to normalize because of that damage, the facility will not be able to ramp up fully, and obviously expansion plans are also in question. So the LNG market might have a lot more sustained damage coming out of this conflict, and yes, that would mean the power sector in Asia will have to adjust to that reality.
Let's hope for the best, prepare for the worst, I guess. It is crazy. Wake me up in December when the war is over. Yeah. Who knows, man? The weirdest part is, at least for me, is we spoke about this at the beginning. There's so many interesting names that you can't just go all in on one name right now, or at least I'm not going to. Obviously, there is some concentration where people pick their favorites, but even SoFi at 15 here, which it is a stunning price. Some of the cheapest prices we've seen on SoFi in a long time, and then with their newly acquired higher end of earnings, forward P is 25, not 24 now. But Nubank's forward PE is even lower, and Nvidia's PE is 19 times. There's so many unbelievably cheap names, specifically in the Mag 7 alone. You don't even have to take a lot of chances buying into some of these small names. You can buy the 7 or some of the 7 largest companies in the world and see unbelievable valuations these days. The one that I think, once again, is the most absurd is Nvidia's. There was a great comment from Bill Ackman recently. This was just yesterday. Some of the highest quality businesses in the world are trading at extremely cheap prices. Ignore the mainstream media. One of the most one-sided wars in history that will end well for the United States and the world. And we have the potential for a large peace dividend. One of the best times in a long time to buy quality. Ignore the bears. That's so crazy that he brought the Dookie Pie into it. He said, ignore the bears. That's crazy. No, I'm just kidding. I'm just kidding, Dookie. Don't hate. But I see your price targets in chat. That's what Bill Ackman said. And then he also aligned similarly with a feeling that I also have recently on AI capital expenditure plans, where a company like Google, who's spending on AI, can be to protect their existing businesses. And some people could look at that as being a little bit cannibalistic, that you're cannibalizing 10 blue links and instead replacing that with AI to stay ahead of the curve. But then other companies are actually using artificial intelligence as being 100% additive to their business. So you look at Nvidia or a Nebius or a CoreWeave or something like this, and that type of CapEx spend is only for more sales. Let's go ahead and a bear offering you 10K sounds bullish to me. Yeah. If you're telling me that maybe we should set a price target. Like if Nvidia gets down to a certain price, we can set a stop loss, me stop losing and instead having to take my shirt off to buy the dip. There you go. You let me know the what do you call it? The facts of the deal that I can agree to. 143.59. Why so specific? What do you know? Let's go ahead and listen to Bill Ackman.
If you own a stock in a company and they announce that maintenance CapEx is going to be, twice what we thought it was going to be, i.e. the amount of money we need to spend to keep the trains running on time, is twice as much, the stock should go down a lot. If a company announces that business demand is so great that in order to meet the demand, they need to build more factories and we can earn very high returns on the product that we're shipping, you should applaud when they're doubling the amount of money that they're spending. And we think this is squarely in the growth CapEx category as opposed to the maintenance CapEx category. If you
how does that not make you bullish? To me, that makes all of the sense. If Lululemon said they were buying another factory, they needed to just double down on the amount of pants that they can make. Would you sell off the company? That makes all of the sense. Bro, he's full of shit. He's one of the greatest investors of all time. Anyway. He is the worst. He's one of the best, actually. I actually think it's crazy that some people who have been known or who have gotten a call or two wrong, and maybe you were financially involved in that call, but then people just disregard everything else that they have to say. Like, what? No, he isn't. Superstar, how do you think he's managing $20 billion? Do you think like everyone around him is an idiot? All Bill Ackman does is raise money. If I went around raising money, I wouldn't be able to raise $20 billion. You need to be good at what you do, And not only that, you need to be unbelievably good at what you do. Yeah, maybe it's his politics, maybe it's something else, but I see this all the time where people call out unbelievably successful people, like Mark Zuckerberg recently. I watched Brad Freeman. Brad Freeman had this post. I thought this was great. And he goes, Mark Zuckerberg isn't even a good CEO. It's like, that's who's typing this. And then there was other people who were in chat after this who okay, well, you got to be careful just scrolling through. He is horrible. IG saved the company, not started by him. Facebook, Metaverse, and now AI will be flopping. Raj, you need a name tag. This is you, brother. I just said Mark Zuckerberg needs to be on the Rushmore of tech CEOs. He's also incredibly young. We'll have him for a long time. And it's just so funny. Who's paying you to say this? I guess you could say Google or you. Like, I don't know. You? Do you think Facebook is paying out individual creators, or Bill Ackman is paying to be like, hey, I'll give you some money every month, but on the off chance that I say one thing one time, that you defend me? Or do I just look at people's reputations and don't try to give people some semblance of credit for the things that they've done in their lives? You know? Is Marshall going to come on stream? No, he's backstage. Nor do we even have a webcam for him right now. Those people can't handle different opinions or views. I do think like a comment saying who is paying for you like this is crazy. We want Marshall. Marshall, where are you? Here, let me just message him. Use the private chat in StreamYard, brother. Okay. If Tanner doesn't disclose things based on new Canadian social media laws, then Tanner goes to jail. Sure. But I even like the idea of whenever people say like, hey, if you break a rule, you go to jail. It's like, more likely than not, I'll catch a fine. But everything is to jail for people. You go to jail. Shirts will. Did I just message shirts will come up? That's how you know Marshall is here, because I definitely did not message that. He's using my chat to post comments. Okay. That's funny. Tanner, thanks for the laughs. Well, I think we need it at a time like now. A time like now. It was funny. Marshall edited his first video of mine yesterday, and he messaged me. He was like, you don't even talk normally at all. Like, you talk like you're learning the English language. And I was like, I agree. I don't know how to put together a sentence. Even that was not a good sentence. I'm horrible. Okay. Marshall, whether you like it or not, if you're not going to message me, I'm going to put you on stream here in a second. So you better send me a message now. Don't post a comment. Private chat. Is English? You know what's so funny? I don't know another language. In Canada, where we also should learn French as a secondary language, or Quebec maybe as a primary language. But yeah. Okay. Let's quickly see what's going on in the markets. A lot of memory news right now. Micron is getting sold off. Maybe a slight recovery. Micron bounced off the $324 mark. Now back, starting to climb up, 327. But it's now a $370 million company. Marshall does work from home. Yeah, he'll be coming by $369 billion market cap, but it was over $500 billion before. Sorry. Yeah, that is cheap. That would be cheap. All right. Let's take a look at the QQQs. Red again. It was green whenever we started the day. I thought for a minute there that we were going to have a good day. Dookie's always trying to use money to get her way. I'm telling you. You have to wait patiently for Marshall. Okay. Any worthwhile earnings? No, not really. I checked earlier. We have Nike tomorrow, Restoration Hardware, Encino, which is a company that is a little bit like Galileo that SoFi has. Bitfarms tomorrow, FactSet. But they're not insanely exciting. For next week, nothing really. Applied Digital, maybe. WD-40. ExxonMobil on the 10th of April. And then we get into a really big, like the week really starts on the 14th. Okay. All in on BMNR. BMNR is below MNAV right now. I was looking at this today. That's what the video will be about. Today is BMNR, just a quick update. Now that I have Marshall on the team, we'll be able to do a lot more than just those two companies. We'll be exploring, like doing more videos on Nvidia and Nebius and a lot of the stuff that I'm actually looking at, Micron. So that will be interesting. But essentially, whenever you look at the cheat sheet for BMNRs, it's not looking great. They have about $9.8 billion worth of Ethereum holdings, okay, at $2,073 per ETH. The market cap of the stock is less than that. Once you include their cash and Bitcoin and all of that stuff, it gets even worse. And so you're paying $9.6 billion to get $11 billion in assets, which is good if you're a buyer, but it's not good if you're holding and you were paying above MNAV prices and now it's below MNAV prices. I'm outside on my patio with the sun and the birds, sipping on some wine. Life is amazing, and this podcast is the best. That's fire. I like that a lot. I can't believe I just said that's fire. That aged me so much. Aged me in the wrong direction. That's great for you, Dookie. All right. You know, whenever you like, well, I guess you don't, but let me tell you how it works here. I do this podcast live, and probably about twice a day, I say something and I go, okay, well, that's a clip now for the rest of my, like, AI will be able to find that. That's good. And I also think that's why Marshall doesn't want to come on stream, is if you're not used to it, if you're more introverted than extroverted. Live streams are a different beast. They are. That's the bee's knees. I like the bee's knees. Tom Lee's the new Jim Cramer. Dude, look at the things they're saying about you. Marshall's got small lats. They know where to hurt you. They already know who you are. Marshall could jump out of a plane and survive. He's got that big of lats. Dude, the dude works out. The cat's pajamas. Okay. Let's go ahead and see a quick video from Stephen Moran on the markets right now. Actually, you know what? I'm going to change my mind. I'm going to go to this one because this video is actually quite insightful. Albeit scary, it was still very good. Let's have a listen.
The Wharton School and Allianz chief economist, Mohammed, always great to see you.
Thanks for having me.
So, I mean, if you take a look at the bond market, the cues there seem to be shifting to a concern about growth, concern about longer inflation. Where do you stand on all of this?
So I do think we're going from a price shock to a price shock and a demand shock. And that's the economic logic of all these tipping points that are being triggered in the war. I must say, I'm more worried than the average. I'm more worried than the average because of the dynamics of the war. It's an asymmetrical war. You have 3 parties, now 4 parties, all of whom believe they're winning, which makes it very hard to end this war. And the US is the only one that can declare victory, but can't impose outcomes. And I also look at the economy, and I'm starting to see demand destruction that can accumulate. And if you go to Asia, they're not just worried about higher oil prices, they're worried about actual physical shortages.
Right.
And that is another tipping point for the global economy. So in general, you know, I've gone from reduced risk to maximum risk off to now a few names look attractive, but I would not be going into the market and buying the index at this juncture.
When you talk about demand destruction, I mean, Asia is talking about shortages. Demand destruction is happening elsewhere outside of the United States. We might be a long ways off from demand destruction. So how insulated can our economy remain, even if elsewhere in the world there is sort of this greater impact?
So we win in relative terms under virtually any war scenarios.
But relative terms don't mean that much to the average consumer or to the markets, maybe.
Right. But so the question is in absolute terms. I think there's no doubt that we are going to have not just an energy price shock. In my mind, we're going to have an inflation shock. Secondly, we are likely to see that inflation shock translate into less spending, particularly for the lower income households. So there will be a demand effect. If this continues, so you start with energy shock, interest rate shock, broader inflation shock, demand shock, then if this continues, which I hope it won't, we're going to be talking about financial instability. So that's the sequence. Hopefully we don't go all the way down, but that's the sequence that's been triggered by this war.
$200 barrel in oil. Amongst energy watchers, that had always been sort of the outlier scenario, but that outlier scenario seems to be moving a little bit closer and closer as this conflict continues, particularly because every day the war goes on, there's an increased chance that there's going to be terrible damage to infrastructure, which would create this longer shock to happen. So how do you think about that in terms of what that would be? Would that be the systemic shock that you're talking about? Would it have to be that dramatic?
So the first tipping point happened at the end of the second week when we went from disruption to damage. Damage means the tail is much longer.
Yeah.
And you heard Qatar come out and say 17% of its LNG exports have now been disrupted for 3 to 5 years.
Yeah.
There's also been damage in UAE, less so, but there's been damage, and there's also been damage in Saudi, less so, but there's been damage. So that's the first tipping point. The second tipping point is when we started seeing attacks on other infrastructure. So aluminum was an example over the weekend. That has resulted in a 6% increase in price. And we are starting to realize it's not just about oil, it's about fertilizers, it's about helium, it's about aluminum. There's a whole list of things. So I do worry that we are going to go to a broader shock. But the next tipping point economically is actual physical shortages. If we start seeing that in Asia, that will impact the US. So the US will now import higher products in terms of prices. And the question is, do we now see also a disruption in the availability of products?
So in terms of what markets are not pricing in, do you think that it's, I mean, last week at Sarah Week, a number of executives, including Mike Wirth of Chevron, had said that the oil markets are not pricing in what is going on in terms of the disruption to energy. Are we not pricing things in equities? Are we not pricing things in energy, in the bond market? I mean, where do you go?
So you heard earlier, there's a massive differential between the physical price of oil right now in Asia, 140, 150, and futures.
Sure.
Okay, at some point, you need convergence to happen. Equity, we still have this mindset that this is transitory, that somehow, yes, there's going to be a short-term effect, but we should look through it. And then the third thing we're not pricing in is there's very limited policy flexibility. We've been bailed out by policy over and over again, whether it was the Fed flooding liquidity or whether it was the fiscal. We don't have those degrees of freedom anymore. There's a real question mark as to what the Fed is going to do, and we're already running a 6% deficit. So the market hasn't quite realized that if this goes on, the policy offsets much less than what we've had before.
I mean, not only is it bearish, it's also convincing. Like, it makes a lot of sense. It's just a matter of what's going to continue to happen. But the more infrastructure that gets destroyed, like, this is not just bad for oil, this is bad for everything. And this is, yeah, it does suck. Okay. Yeah, this is so funny. So Marshall said he'll be right back. But what's it called? I do, like, Marshall doesn't have a investing background at all. I think he buys stuff like the S&P 500 and stuff, like for okay, here, one quick second. I'm going to bring up Marshall on screen. He doesn't have a webcam, like I said. But and let me drop this really quick. So Marshall doesn't have a investing background or anything like this, but I do hope that you guys pitch him on some of your more degen stocks. So whether that's Shift4, SoFi, Nvidia, he's going to obviously be a prudent investor to look through the crap and invest what he believes in. Maybe he doesn't buy anything, but I told him, I said, if we do a year of this together, like, I don't think there's going to be anything that you're like not buying right now. Marshall, what's up, brother?
Hey, everyone. Thanks for all the warm welcomes and everything. Excited to be a part of this.
Yeah, he's doesn't follow, like I said, doesn't follow the markets, but is going to help me out with a lot of the editing tech stuff. He has a coding background. How do I say that?
Yeah, no, programming, very light. But yeah, my knowledge of this space is minuscule, to say the best. Apparently, when we're talking about Trumps and tacos, it's not Mexican food. So
yeah.
I had to Google that real quick, but I think I get the gist.
Yeah, exactly. But honestly, if you're listening to every live stream and doing all that stuff and keeping notes and doing the chapters, like, you'll pick up on it super fast.
Yeah.
And you turn on the camera. There's no camera to turn on. He's got to go find a webcam. He has one, but he hasn't used it for, like, he wasn't working from home before. So how is it to work from home now?
It's much better than having to commute on the 401. That's for sure.
Yeah, he sounds like you. I went to school with Marshall for a long time. We were gym buddies. Like, I've known Marshall for a while, so I'm sure there is some cadence or like local speak or whatever. We're from the same area, roughly. So, but yeah, you guys will see Marshall probably next week here. Like, he'll be at my house and say hi to the stream that way. And then if we do a meetup in Toronto in August, that'll be Marshall that actually ends up putting some of that together. So actually, I should probably put that up. If you guys have any questions about the meetup or anything like this, Marshall has his own email. I'm gonna blow up your email already.
Perfect.
Let's see here. Or maybe I'll put that in the chat. If you guys have any questions for Marshall, message him, marshall@futureinvesting.pro for the meetup, any stuff like that. Obviously, we'll let you know a lot sooner. Like, we haven't even done anything with this right now. We're just focused on editing the videos and getting more content out to you right now. But that will move into other aspects. And pitch him your stock ideas. Pitch him your stock ideas. Does he have a mustache? What are you rocking right now, Marshall?
Right now I'm rocking a cobbled together beard with
Homeless
like
look.
a bit of the soul patch and mustache combo there. Facial hair is not my forte. Just same as stocks.
Yeah, but it's funny because he's like, yeah, I'll get all cleaned up for the stream. I was like, dude, just be you. Like, there's no dress code for this job. As long as we're doing like we're picking good names, and right now we're not even doing that. So yeah, your career's on the line right now, dude. Yeah, he is AI. He's not actually a real person. Soundhound AI Marshall. Yeah. No, you guys will see him next week. Okay. Tanner's gym buddy is AI. He sounds young. I think Marshall's a little older than me, actually, slightly. Couple months, 10 months, something like that.
Yeah, I think so. I'm at the beginning of the year.
Is Marshall your boyfriend? Marshall is a married man, or you got a fiance?
Engaged, yeah. He didn't put a ring on it quick enough. Well, you missed your chance.
Yeah, Marshall reached out to me. He goes, "So are you going to be proposing before me?" And I was like, "Oh yeah, yep, definitely." And then I still haven't. So a little slow, but still in a healthy relationship, I guess. Yeah.
Favorite Gosling movies definitely Drive, by the way. I keep seeing that question go through chat.
Why is that a question?
I don't know. That somebody wants to know my favorite Ryan Gosling, and that I do love me some Ryan Gosling. So
Let's get a
Drive,
quick
for sure.
Q&A. Do you like Harry Potter? You have to like Harry Potter to work
I
here.
do enjoy Harry. Yep.
What else? You still work out?
Gonna have more time to do that working from home now, but no, I've kind of morphed into a short, more compact Eddie Hall with none of the strength. So I guess.
Eddie Hall was the world's strongest man for a bit.
Yeah.
So that's what you're saying. That's your version of yourself in your head.
Yeah. If we do some jumping to get there.
Do you think that you working here has anything to do with the markets being down? Can people blame you for them losing money?
No, definitely not.
Okay. Thought I'd check. Any questions in chat for Marshall? Ask him about his investments. What are your investments right now?
Yeah, just in Vanguard, just S&P 500 stuff.
Cool.
Don't have a lot of capital to throw in the markets in the first place, but
well, hopefully
that'll change. Yeah,
that changes. Do you like Timbits?
I think I'm just more of a full donut kind of guy, but Timbits are fine.
Yeah.
I'll bring them to the party. I wouldn't go out of my way to get them for myself.
Marshall versus Steve in a cage match. I don't know, man. I might have Steve on that one. Steve's a monster, dude. Steve's a giant. Munchkins are Timbits. That's like the American version of what a Timbit is. Yeah, Munchkins are, yeah. Do you drink coffee? Do you guys have any actual questions for him? That's so funny.
Coffee and tea. I drink them both.
There you go. All right, ladies and gentlemen, that has been the stream. Thank you all so much for watching embarrassing Tanner stories. Nah, he's got to get back to work. Thank you all so much for watching. Really do appreciate your time. But until next time, bye for now.